Welcome to episode 37 of the Corporate Real Estate Insider podcast, back with another episode. We've just been catching up here for a few before we started recording. Owen is getting ready to tell us all about his thoughts on the economy. He's going macro today. Owen, tell us why the recession isn't here.
Yeah, thanks. So let's talk about that. We're always talking about real estate, but real estate obviously has a lot to do with the economy, and the economy is still doing pretty well. And so this first part of the discussion is really just why the recession still isn't here. And I look forward to hearing from you guys as to your thoughts, but it's the expansion that keeps defying expectations. Thanks to steady hiring, strong spending. But the question I have for my fellow podcast members is, and listeners too, should we not be getting too comfortable? I don't know. Are we out of the woods? But the question on everyone's mind, and has been in the paper recently, especially with the latest job reports, which was positive, is why hasn't the recession hit? Despite numerous predictions and economic indicators to suggest a downturn, our economy, in my opinion, has continued to defy expectations. And so what's keeping the recession at bay? And what does this mean for the future? And so if you think about it, and if you've read, what's going on, which has really kind of buoyed the economy, it's the persistent job growth, in my opinion. We have, despite recession predictions, we've experienced significant job growth. I looked at the Bureau of Labor Statistics, and it was 2.75 million jobs have been added in the last year. That's a really robust employment. And a lot of experts say it's been based on consumer spending and the expansion of our economy. Second thing, the reason I think it hasn't arrived is, guys, we have a really low unemployment rate. It's been below 4% for a really long time. And historically, that is a very healthy unemployment rate, as those of you know. And we haven't seen an uptick. In fact, we keep seeing it drop or stay steady. We also have the Federal Reserve's monetary policy. Even though they've increased interest rates to try to stave off inflation, it has yet to see a major impact on how things are going in the economy, and certainly things haven't cooled like many thought they would. And then finally, we've got this resilient economy. We've shown remarkable resilience, partially due to the private sector balance sheets, and also the government stimulus didn't hurt. But that's all kept consumer and business spending up. And so the question I have is, with all these things that are going on, are we going to see any sort of downturn, or is the recession a misnomer? Was it all just kind of, publicized by the media to sell clicks? I don't know. We have real estate debt and challenges, forthcoming. We've talked about that a lot on the pod. We don't need to go back into that. But that's put a significant, hamper on the housing industry, both in terms of the sales, but also new construction. We all know what it's doing to commercial real estate with all the loans coming due in some buildings which are defaulting. But it hasn't yet been such an instance where, it's had a drag on the economy. So question for you guys is, why hasn't it hit, if you have any other opinions other than those I gave you? And should we be comfortable or not?
Oh, and thank you for giving us a nod. I think it was Friday that this would something you wanted to talk about on this morning's pod. So I was able to spend the weekend walking with it, thinking about it, Googling a few things. So the reason people are expecting a recession is the inverted yield curve. If people don't know what that is, an inverted yield curve is when long-term rates are lower than short-term rates, and there's different rates you can choose to compare, but the yield curve has predicted a recession virtually every time since it was first being studied. There's some that claim there was once it didn't happen, but that was only because it took 3 years to actually for the recession to occur. I'm going to say that inverted yield curve accurately predicts recessions, and we're currently in an inverted yield curve. It's been inverted since July of 2022, so basically 2 years of an inverted yield curve. So why hasn't it happened yet? I sort of had this instinct that this time feels different. And but then I had the great privilege, luxury to go to my Sunday morning drop-in pickleball game, where I was able to talk to a CEO of a bank and the CFO of a Fortune 500 restaurant chain. and say, what do you guys think? Yeah, you see a recession coming? And both of them said, yes, definitely. And it was the CEO of the bank who I think his comment was the best. When I said, yeah, but it feels different this time. He said, I actually agree. And here's the thing. When I look back at every recession we've gone into, we've said that every time. This time feels different, and it never is. So he's just trusting the metrics that show and are predicting a pullback. Great. That's part one of my answer. But here's part two of my answer. And I don't mean to hog the microphone, but I think this is important. This metaphor that I like to use is an ocean liner proceeding through the ocean against a tide, against a current. But for the power of the engines to push the boat forward, we'd be pushing backwards. That's our economy, right? And the Federal Reserve, has different tools to propel the ship forward. It has other tools to slow down the progress or actually, reverse thrust back up. And there's a time lag. It's this massive vessel, right? So you can hit forward thrust. And here's the thing. We're trying to proceed against a current of unknown. We don't know how fast the current's moving, but we want this ship to move at 2 kilometers an hour. Like the Fed's growth rate target is 2% a year. First of all, that's an arbitrary number. And where did that come from? Okay, we want to grow, but we want to grow not too fast. And right now we're growing at 3%. The ship's going at 3 kilometers an hour and people are panicking. It's like, oh, we got to get to 2. Okay. Recession is just a word. Like as we proceed through time across this expanse of the ocean in this ocean liner, we're going to speed up. We're going to slow down. There may be times when we slow down just a little too much and actually the tide starts pulling us backwards, at which point hit the thruster, move the thing forward a little bit. This is what the Fed does, and it's trying to manage against and by the way, we just came out of this storm and waves and chop of COVID and global pandemic, and we're doing pretty well. This thing's clipping along at 3 kilometers an hour. We're going to try and get it down to 2, and it might go too far and actually go negative for a moment or two. It's just not that big a deal. In the process, we're just trying to keep the thing steady and moving forward at 2, and they're doing pretty well.
I get it. No offense. I think that's a pretty common belief for people that live in California, quite frankly. But when something like 70% of the U.S. lives paycheck to paycheck, costs are up, close to 40% across many goods since before the pandemic. A recession is a big deal, and people feel it. It impacts people drastically, and people's ability to put food on their table for their kids or send their children to school, college, whatever it is really important and really impactful. So yes, it doesn't seem that way for many, but for most, it is very impactful. And the U.S. economy is driven on the backs of the consumer. The U.S. debt that is fueling this growth right now, I think that a lot of it is fueled by the U.S. Government. It's almost $700 billion in interest payments on the U.S. debt, which went up almost 40% from 2022. And it's going to continue to rise exponentially from there. So when's it coming? I don't know, but there's a reckoning coming if we continue to spend the way we're spending, unfortunately. And if you look at the jobs report, I think all the media outlets, it's an election year. Doesn't matter who you like. No one likes bad news in an election year. The full-time employment went down by 625,000 jobs. Part-time employment went up by 250,000 jobs, and every month those are revised. So I think the headline of a strong jobs number is really just that, headlines, and not really actually what the economy's doing. And if you look at look at now the private sector and what are companies doing on CapEx spending. CapEx spending is down. Just let me get the number. It increased last year 14%. That's down from a 67% increase in capital spending by companies in the year prior. What does that mean? The companies are buying less stuff. They're investing less into their businesses. They're investing less into their assets, their buildings. And that's a major drag on other businesses downstream, right? So if you ask me, I think there's significant headwinds in the marketplace I think the consumer debt, if you look, and I don't have the stat in front of me, but if you look at credit card debt, all-time highs. Look at, delinquencies on auto loans. It's past 2008, 2010 recession numbers, right? So these are all little data points that are coming out. And the only thing that's doing really well for wealth is the stock market, right? So it continues to defy expectations. But if you take it from my perspective, I think there's a lot of negative data points that, to me, create pause in the overall U.S. economy right now.
I got to go next because you took a shot at California. And in case I do sound heartless in my discussion that recession is just a word, I stand by my premise. And what you're getting at is at the individual level and a lot of pain. And I couldn't agree more, right? The problem with the conversation about recession is it's an average. It's an average of, the total gross domestic product across all industries. And so, that's what we're measuring for. And of course, it's not going to pick up the individual human stories of people who are suffering. We're living in a time of radical income inequality. And
yeah, I had to take a dig at California. It's no different than New York, Massachusetts, these, coastal elite cities that have less impact. But a recession it's just what? It's a consecutive quarters of negative GDP, right?
they don't even agree on that. I mean, yeah, in theory, it's 2 consecutive quarters of negative, but we just had that. And they're like, yeah, but not that one. That doesn't count. That's not a recession.
Well, there's some sort of independent group that certifies if it can count as a recession. And they take like 12 to 24 months to actually put the report out. So when it happens, no one can agree on it until like this independent certification. I forget, but it's in a political, in an election year, all this stuff gets blurred. But yeah, I think the economy is doing well on the top line, and then the bottom line stuff, it's struggling. I think there's a lot of people that are really struggling because of inflation. And while we've got the Fed trying to get inflation back to a manageable number, it's that huge run up in cost that I don't know if we're ever going to get back there, right? So that's the scary part. Even if we get inflation back to the target, which is 2%, it's still significantly higher than it was just a few years ago. And you strip out gasoline and you strip out food and they strip out all these other items. But at the end of the day, people still got to put gas in their car and still got to feed themselves, right? So it's a really difficult piece. And I think from the perspective of our listeners, you see companies making much more deliberate and strategic decisions on how they spend money and how they make decisions across all industries, because while things are still good and they want to capture the growth out there, they don't want to get caught in a game of musical chairs and left without a seat.
I think the big thing that has changed, right, is that when you think about the Federal Reserve's impact in setting monetary policy, adjusting interest rates, things like that, obviously like, buying, selling bonds, quantitative easing, quantitative tightening, all that. I feel that we're in this era, and this is not a political statement because I think both sides of the aisle do this, but it very much feels like the other type of stimulus, like whether it be infrastructure spending or stimulus checks and all of these other methodologies of stimulating the economy that are not driven by the Federal Reserve, it seems like they're constantly fighting at one another, and the Federal Reserve is trying to, at least I hope, steer the ship in an unbiased manner, or at least as unbiased as they can be. And then we have these political parties that are saying, wait a minute, I get political capital if I can issue a stimulus check, or if I can announce a major infrastructure investment into our freeway system or something that's going to create jobs. So on one hand, you have, the Fed, I think, trying to do their job, trying to set monetary policy that's going to ease inflation. But then on the other side, you have these people that are not necessarily long-term stakeholders that are looking for short-term wins. And those short-term wins, unfortunately, erode the work that the Federal Reserve's doing. So, are we eventually going to come to a recession when the kind of insane levels of stimulus that we've had, not from the Federal Reserve necessarily, but from Congress and infrastructure and, jobs investments, tax credits, things like that the Federal Reserve's not involved with? We'll see. I don't think anyone really knows, not just of the four of us, but like, I truly don't think anyone knows. If anyone knows, they should go be the chief investment officer of Blackstone or something.
Well, you realize it's not just stimulus spending. You're getting at the crux of it. All government spending is inflationary, right? And when you're spending at a clip, doesn't matter if it's Democrat or Republican. If you're spending deficit spending at trillions of dollars over what the country is bringing in for receipts, it's all inflationary, which driving costs up, which makes everything more expensive. I mean, the story that I always come back to in this topic is, and I think it's South Carolina, but the Department of the Air Force has recommended the removal or the discontinuation of the A-10 Thunderbolt airplane for like 50 years. And the politicians, so the people that actually fly the plane and use the plane, don't want it anymore. And the politicians keep adding it back into the budget because they don't want their districts in that state losing that plant, right? And so we're building an airplane that the people who actually use the airplane don't want anymore because they don't want to lose the jobs. The politicians don't want to lose the jobs. And that's just a one example of probably thousands of examples of how our government is inflationary, right? We would need to make really, really hard decisions. Same with what's going on with commercial real estate too, by the way, right? There's this whole pretend and extend and these workouts and all of this stuff going on. And you're starting to hear the volume of buildings trading at significantly lower numbers and being taken back by lenders is increasing. But there's a ton of, 10% is probably what we're seeing. Is probably 90% of it hasn't happened because the banks don't want to deal with it and they just keep extending loans and pushing it out. And that's in itself, it's not allowing it's making the problem worse over time rather than accelerating getting it done and getting through it, in my opinion.
Look, I think it's really important that we eventually get to some sort of more balanced budget. It's, of course, unsustainable to just have increasing debt loads forever, right? Eventually that system breaks. I think it's important to keep in mind that there have been many incidences in history where there's been mass fear around debt loads. Like there was massive fear after World War II with Britain and Japan and the US and tons of economies where the debt loads that they have relative to GDP were similar or even higher than they are today in the US. I was reading a report a couple weeks ago from a Nobel laureate winning economist talking about how in order to balance and start reducing our debt levels and balance the deficit and all that we'd only need to reduce spending by a little over 2% of GDP. And when you start thinking about, okay, that doesn't sound like much, I believe that that's fairly doable. But how do you get it done in today's political system when there's things like what Brian's talking about of each politician, instead of thinking about, hey, if it's good for the hive, it's good for the bee, they're just thinking, well, how do I get reelected? And I think this is a very insidious problem that makes these somewhat seemingly simple things of, hey, we just need to figure out how to reduce our expenses by 2% of GDP and we're good. I mean, obviously I'm simplifying an incredibly complicated problem, but the incentives aren't aligned, and it's very tricky as a result.
Just to kind of wrap this up and bring it, because I know we want to get on to the next topic. John, I do recognize that while you may be apathetic to the theory of recession, you certainly aren't callous. And just for our listeners, I know where your heart is, and so I received your comments such as that you weren't again just being callous. I know it was just a frame of words, so I just want to kind of come to your rescue on that one. And then Brian, on the spending, like that A10, that's classic pork barrel legislation. Okay, you look at the representatives who've been in office for the longest; they bring home the money. That's just what happens. And unfortunately, we don't have term limits with our legislative elected officials, but that's another topic that we won't even get into right now. But I want to just kind of keep you guys, as what keeps me up at night. You're right. Nobody has a crystal ball as to whether or not we're going into a recession. If they do, if they have the knowledge to kind of foresee recessions, they should be, in a different career helping advise our country. But What concerns me, and what could tip us into this, is some sort of sudden economic shock. The pandemic was something like that. Before I was born, we had the energy crisis when OPEC cut off the supply of oil to the United States, and there were long lines for the gas pump. Some people couldn't even get gas. Those types of things can happen. Excessive debt, like you guys talked about credit card debt. When people can't pay their bills and have maxed out their credit and get forced into bankruptcy, that can capsize the economy. Housing bubbles. We talked, that just happened recently. I mean, not in too far distant memory, 2008, when we were at a bubble and that bubble popped, causing us to go into recession. I frankly worry about this irrational exuberance that people have over the stock market. Alan Greenspan actually referred to that, used that term, irrational exuberance. People love to talk about the stock market as kind of a barometer for the economy, and to me, it's a component of it. But when 70% or maybe 50%, I don't know the number, so our listeners could probably correct me, but there's a lot of people in this country that don't have a dollar to invest in the stock market, and so it's not like it's an all-encompassing kind of measure for how things are going. I mean, it's been pretty good this year, and especially the last few weeks, but it doesn't give me any sort of comfort at all. And then finally, we talk about inflation. We've talked about it a lot. Not only is it costing people at the pump and the grocery stores and so forth, but if we can't get inflation kind of truly, truly under control, that always could drive us into a recession. So there's just stuff that can happen that here in June of 2024 we can't foresee, but we could end up being somewhere else at the end of the year. We do have that election as well, which could kind of, who knows, see where that kind of lands. But nobody knows. Lots of things could happen. Good thoughts, guys. And let's hope we're convening later this quarter or next quarter and things are even better.
It's a good transition, Owen, because I want to tell a little story about the stock market. So I was out to dinner. This does have to do with the topic I want to talk about, guys. But I was out to dinner last week, and a friend of mine was saying his mom is a huge Jim Cramer fan from Mad Money. And apparently Jim Cramer, I didn't know this, named his dog Nvidia. And she took that as, you wouldn't name your dog Nvidia if you wasn't really, really, really confident in the stock. So 8 years ago, she dumped, like, in his words, way more money than my mom should put into Nvidia. She did. And that was 8 years ago. And he's now trying hard to get her to sell it. And he said, the problem is I've been trying hard to get her to sell it for about 4 years, and she won't believe me now. So hopefully he's a listener of the pod and I can tell the story. But someone's sitting on a lot of Nvidia stock right now after the 10-to-1 split. But the purpose of that story is to transition into AI, and I saw a couple things that I thought would be interesting to our readers. The first one is kind of what was a question, like, what is AI doing to the commercial real estate market in Northern California, whereas that is like the home base for OpenAI and a bunch of other AI companies. So set the stage, 100 million square foot market, availability is 37%. Right now, the data that I saw, we're tracking just under 1 million, around 800,000 square feet of demand in the marketplace for AI companies, right? So not a huge piece of the market, certainly not enough to be transformative, but there are some pretty interesting bright spots. So in 2023, AI was 28% of the total leasing in the marketplace, right? So there's a lot of deals that are happening. It's just under a third of what's happening in the marketplace. Prior to 2023, OpenAI was about 150,000 feet. And then in last year, they went and leased 455,000 feet from Uber in a long-term sublease. They're now in negotiations, we are told, for another 315,000 feet and in the market for another 500 more. So just massive growth. like Sam Altman or not, like OpenAI or not, it's a pretty amazing story around their growth. A couple other AI companies, Anthropic, 230,000 foot lease, Scale AI, 175,000 foot lease. So just amazing stories of American ingenuity and growth, and a really cool a really cool story for Northern California when they need it, right?
I'll add the idea that the impact of AI on life science is going to be profound in terms of using compute to discover novel compounds. All of a sudden, we're going to have more interesting drug candidates that need to be explored. Phase 1, Phase 2, Phase 3, Phase 4. We're going to see a radical acceleration into the life science space, finding cures to disease. Just say, what an incredible time to be alive.
It is, and that leads into this next topic. So I saw a report that was issued. It's the 2024 Work Trend Index Annual Report from Microsoft and LinkedIn. And the topic of this year's report is AI at work is here. Now comes the hard part. So come some stats that I thought were just amazing. So 78% of knowledge-based employees are using AI at work that is not work provided. And the breakdown is pretty amazing. So of that 78%, 85% of Gen Zs are using it, not unexpected. The 15% is probably more unexpected than anything. But 78% of millennials, 76% of Gen X, and 73% of boomers. And this is tools that are not provided by their employer. So 73% of boomers are taking ChatGPT or Bard or one of these other ones and using it at work, which I thought was pretty amazing, for that generation. So a couple other cool stats.
This is potentially hugely problematic that there's so many people that are using these engines. I was having a conversation just in, my community of friends in Los Angeles, and talking to somebody, and he was explaining to me how he uses Chat GPT for his work. And he works in big tech, right? And doesn't have like an AI system he's supposed to use. He just uses it to be more efficient. The amount of people that are feeding confidential company information into these engines that they do not have a duty to be confidential about, that are now making the model better, is terrifying. Like, companies need to figure out how to protect their intellectual property. If 70% of these people are using these engines without training, without reminders around their non-disclosure agreements and their duty to protect company confidential information, and now they're just copy pasting whole emails being like, how should I reply to this? Like, this is a huge issue that I'm surprised more people aren't talking about.
It goes further than that with ChatGPT, the latest version 4. You can upload PDFs and it can read the entire PDF and give you what information you need. That freaks me out, because who's to say that someone isn't uploading a private document? It could be a lease, it could be a myriad of different things to GPT and telling it to summarize it. Maybe they're not even asking it for a question. Maybe they're just trying to get an abstract of the document because it's 130 pages. But that lives on in perpetuity. It is terrifying, especially for those that, just don't consider, the internet to be this like repository for everything and everything. I mean, it's just like, it's concerning. And I think, Brian, to your point too, just a comment on the AI with employment and so forth. I have a couple friends that run technology firms, and they tell me that now they won't even look at your resume if you don't have knowledge of machine learning, data science, etc. So you have to be, there's a lot of programmers going back to school right now to get certifications or enhancements in programming language like Java, C++, Python, R. There's a bunch of them because nowadays the best programmers are programming and coding with AI, not just doing it on their own. We're just barely just starting down this journey. There's so much to go forward.
Yeah, two good points to unpack on the job growth stuff. I was going to get there. It's you're exactly right. So, AI hiring with AI talent is up 323% in the last 8 years. Right, 66% of leaders say they wouldn't hire someone without AI skills, and 71% say they'd rather hire a less experienced candidate with AI skills than a more experienced candidate without. It's really interesting how the marketplace for employees is going to shift young very quickly, and the boomers know it, right? So I better get on board because I'm not. Now I don't know. Like to your first point, if you're, companies. It's funny. I went into a presentation by an MIT professor who had a doctorate in AI, and in one of the people in the audience, I forget what company she was with, but she had said that they had to lock their whole system down because people were using it to summarize contracts, summarize emails, and it was all confidential information. So now they've created a project where they're acquiring a large language model to bring in-house that people can use for the same project, for the same purpose, but it's not using open source data because they don't want other information out on the web. So what do you do if this percentage of people are using these large language models that makes the data you put into it public? You're effectively providing the marketplace with all of your confidential information, even if it's as simple as an email. I didn't even think of that in terms of this study, but that's what the study is telling us. 3 out of every 4 people are leaking confidential information every day.
I think it's so funny because there will be real estate brokers on Twitter or X posting about how efficient they are using this great technology to make their jobs easier, and they're doing a better job for their clients. And really what they're doing is that they're advertising that they have no understanding of confidentiality around all their clients' requirements that are now being fed to these giant open source, language models. So yeah, it's very problematic. I'm surprised there hasn't been more talked about on it.
Yeah, but you think about it. So this is the perspective of the employer. Let's think about it from the perspective of the employee, right? So 68% of people from this study say they struggle with the pace and volume of work. 46% say they're burned out. 85% of emails are read in under 15 seconds, right? So if there was a way to take an email, summarize it, and respond, that could be 5 minutes. It could take 10 minutes. Some take a lot longer. And the average time someone actually spends to read is 15 seconds. If you had a tool to be able to help you respond quicker, how much better would your day be, your life be, than sitting in front of work and emailing all day, right? So 60% of the average person's day is spent in communication. So take the average worker, and they're spending 60% of their time on something that potentially is only read in 15-second increments. So if you had a tool to help you be better at that, you could take 60% and put it towards more innovation, put it towards more things that actually make your company better rather than just communicating internally or externally. The opportunity there is massive, and I see why people are gravitating towards it as you start to put the pieces together. But then you layer in this risk, and it becomes very scary.
Well, this is the next thing to come for corporations when you sign your employment contract, is that there's going to be language in your contract that's going to require, at a minimum, data masking for whatever you uploaded to AI and anonymization. But I would hope for even something more strict where there's data governance policies where they establish strong criteria as to what can and cannot be shared with AI. That you find me a company, well, I shouldn't say that because you probably can, but I'm not aware of many companies, I should say, that have strict governance around AI in the workplace. Certainly there's no restrictions for most to get to ChatGPT or any of the other engines that are out there. Furthermore, everyone has access to it on their phone. So this is something I'm sure that is like on the top of executive leaders' minds, and their general counsel as well, because there's probably some legal compliance relevant to laws and regulations. I mean, think of HIPAA, think of GDPR, CCPA. There's a lot of things that this could be violating. So anyway, it's fascinating. I imagine this is going to become front and center very soon with, and I'm sure general counsels are all over this, trying to think about how to incorporate the restrictions that is into the workplace.
Yeah, it's as people, you think about it, if you're working from home and you've got your personal laptop right next to your work laptop, and even as they create the restrictions, especially for companies that are not, like if you work for Deloitte or you work for somewhere that's figured this stuff out, like how do you move data between personal and private? It's very tempting to, stick a thumb drive in, grab the file, put it in your personal computer, throw it in GPT, and you look like a hero. How are they ever going to know?
Well, and I tell you how they know, in some cases, is I've emailed people before, an email that's probably, I don't know, a paragraph long, but with some action items, okay? I got a response from one individual probably in 12 minutes, and there was no way that this person could have written a response to my email in 12 minutes as thoroughly as he wrote it. I mean, literally, unless the person is, part of Mensa, in the fastest typer in the United States, it was literally impossible. And it was so glaring to me, especially given the nature of the context that the grammar that he used, that he did not type it. And to me, then I was like, well, wait a second, this guy's just feeding me an AI-driven answer. He didn't even write this email. One of the telltale signs is the first line is, "I hope you are well." I'm like, we just talked. What do you mean you hope I'm well? So anyway, for those that use it, be wary, because the grammar is obviously impeccable. Not to suggest that grammatical errors are acceptable or should be the norm, but it was very, very obvious in this instance. And I've had a few cases where someone responded so quickly with a very verbose response that I'm like, there's no way they wrote this. They took my email, they copied it into GPT, they said, please write me a response to this email with some commands, and out came the email. And you run the risk, if you get caught in that, it's almost, to me, it's akin to plagiarism in some respects.
Yeah. So how do we relate this back to our world, right? In real estate, I think, first and foremost, there's growth across pure AI companies. But John, you hit the nail on the head. We're seeing growth here in every, it's a very diversified economy here. So it's in healthcare, AI, so companies that are supporting the hospital and healthcare industry. It's companies that are supporting life sciences and making drug discovery and drug advancement move much quicker. Pure tech companies. It's defense companies trying to get into AI for the defense industry. We're seeing it with clean tech companies that are trying to use it and adopt. And it's really quite remarkable. I think, if you're running a software company or a tech company, you don't have a .ai, a URL, you're going to be left behind, because the demand is all coming from that side. And it'll be interesting where the industry shakes out and how it really impacts overall growth. I will say that based on these deals in California, the folks at these pure AI companies are in the office if they're taking that much space. So that's a good sign for the marketplace.
So this is from the Wall Street Journal. I was fascinated by this article. Hopefully it's not that boring for others. I think this stuff's kind of interesting. It talked about how workers will do everything but get on their phones. They don't like to answer calls. And that's not to say everyone, but that's a majority right now, it seems like, in the workforce. Maybe that's mostly Gen Z. I don't know how the context. It didn't share who or what age group doesn't like to get on the phones. But it's really interesting as we get into this digital age and this complex relationship between technology and communication in the workplace, right? Think of all the times that we are spending during the day responding to emails, responding to messages on Slack, which is great, but some people think it's just another vertical for communication like Outlook or email. But we're seeing a shift in how people communicate. And with tools like Zoom, Slack, email, etc., becoming the staple, there's a growing debate over the role over whether or not there's a need for a phone call at all. And the phenomenon is called telephonophobia. It's a real thing. You can Google it. Telephonophobia. And it's the reluctance to use phone calls in a professional setting. This has nothing to do with you calling your friend on a Friday night or on the weekend. This this is a reluctance to pick up the phone and call one of my podcast members, or you call your boss or your teammate. And it's causing tension amongst employees who prefer to just chat on Slack or, do a Zoom chat or do email. They just are like, why do I need to pick up the phone if we can just use this thing that I'm in all day anyway? And I think a lot of this has been brought on by hybrid work dynamics. That's what the article even suggested. It intensified during COVID when we were all kind of working from home. And obviously there's some generational differences. Younger workers, particularly under 40, I would suggest, are probably the ones that are a little bit more anxious for a phone call versus those that are over 40. That's just my hypothesis. But it's really having an impact on business communication from what the article suggested. And it can drag into very long and lengthy email and Slack exchanges. And that totally makes sense. And I don't know, in some cases, how much more efficient that might be. To me, I feel like sometimes phone calls are much quicker because there's a cause and response, right? Back and forth. Whereas rather than having to type and wait for that person to respond because they get busy on doing something else, you can get an answer rather quickly. And so it's just a workplace comment. We're all in commercial real estate, and I think the workplace, this would pertain to any sort of commercial real estate, whether you're a tenant, a landlord, asset manager, investment fund, et cetera. I mean, we're all communicating all day, every day. But I'll be interested to see if there's increased coaching, or maybe not, for those that are younger that have become accustomed to things like Zoom and Slack to pick up the phone once in a while. Or is this going to become an increasing trend? And fast forward 5, 10, 15 years, is the phone going to be all but obsolete, less calling your friend?
So a couple of thoughts. I think that within the commercial real estate world, that there are a lot of people that are not very busy that just want to hear themselves talk and want to feel important and fill their day with meaningless activities. And that drives me nuts. Like the amount of people that call me to talk about nothing that could have been literally a one sentence email is truly wild. And it makes me sad for all of these people's clients, because can you imagine if they actually had something important to talk about, how much time they would want to spend on the phone? So I think within the corporate real estate industry at large, and I'm talking mostly in the brokerage community, obviously, if one of our clients wants to call and talk to us on the phone, they can call and talk to us on the phone for as long as they'd like. It's not directed at anyone like that. But on the client side, I will say that the vast majority of people that I interact with actually don't like talking on the phone very often, because they have such a busy day. And while it might be the most efficient way to get the whole idea across in, say, 10 minutes versus having a dozen Slack messages or emails or something like that, the reality is that the context switching that they have to do in the middle of the day to take that 10-minute call might be way more disruptive to their overall productivity versus just being able to communicate an email. And I think one of the most important things for real estate advisors is being able to communicate your thoughts really in a really concise manner via email, and be able to explain strategy via email. And a lot of times, depending on who you're dealing with, you might be working with global head of real estate or something that is going to forward your email with some thoughts of his or her own to the executive team. They want that in email. They don't want to have a 15-minute call just to summarize everything that you said and then forward it on. So sometimes when I read these articles about people being afraid to talk on the phone, my reaction is that a lot of people probably just don't like to talk on the phone because it can be really inefficient. And maybe those people aren't actually afraid of talking on the phone. They just are busy and want to get the most out of their day. And then, of course, we've got, many people in this world that are afraid to pick up the phone to make a dinner reservation or something like that. And that would be a really hard way to live life. So I hope those people can get some help.
I'll tell a funny story. On the segues of Tucker's approach to phone versus text and email. When I first started, I don't even know if I'd started yet, but Tucker and I would text a lot as I'm making the decision to move to this firm, and I would complain because I'm a little older and my hands don't move as quickly. So he would write these very long texts to me, and I'd be like, man, how does he spend all this time writing this big, long, beautiful text? So I sent that to him. He gets like, "Oh, you don't have a keyboard?" So one of the first, I think the first gift I think I ever got at Hughes Marino was a keyboard for my phone from Tucker, well, that I still use to this day to be more efficient at texting. And I think there's my opinion is that there's a difference between people that fight using the phone when it is the best way to communicate versus people accepting other ways to communicate to make their life more efficient and better, right? I think the whole Slack email thing is a different debate. I'm not a fan of Slack because there are all these different channels and things going on, and finding information to me is more important sometimes than anything. And email is at least a way to categorize it and be able to find it pretty easily. But if someone is afraid to pick up the phone, and generationally that is a trend, that's a problem. But I think if 60% of our day is communicating with each other and we can do it more efficiently, I think that's you've got a supporter here, 100%. And I think the more we can create a workplace that supports communications in all these different ways, right? So if there's not a huddle room for everybody to go and to get on the phone, but it's disruptive to have everybody talking on the phone in the cubes or in the cafe or in the conference center. So being able to communicate quietly and protect the other people's efficiency and workday is important too. So, it's hard to peg a number, but that article is very interesting.
The article is not talking about, first of all, Tucker brings up a great point, and there are many cases where Slack or email is most appropriate, especially if everyone is very busy, including yourself. Fully endorse that. The article was talking about people that are truly afraid. They have anxiety about getting on the phone. And I think it's because they just haven't been used to having to communicate on the phone. And that's what concerns me, is that if they can't communicate on the phone, how are they going to communicate in a boardroom or in a meeting? And so it's just not suggesting we need to use all verticals, especially written communication, because I think Tucker's best point there was that there are some times where if you can articulate strategy over an email and your point of contact can forward that to his teammates or his boss to say, hey, please see below, this is what I endorse, and Tucker explains why, beautiful. Because if it was a phone call, then that person would have to transcribe everything Tucker said and may miss a point or two. But I guess where the article is intriguing to me and interesting is, are we losing an ability to communicate, and are we relying too much on written type?
Yeah, that would be a problem. And guess what? This is as old as time, right? There's a hierarchy of communication. There's a time when written, whether letters or texts, are appropriate and clear and documenting, and then there's a time when maybe the message has some nuance. And the idea that we pick up the phone and we talk and we interact in real time, you can hear my tone, my inflection. The minute there's nuance required, there's nothing like an active conversation on pick up the phone. And then, when it matters a lot, there's nothing like in person. Like, let's go see the person and interact in person and have time together, maybe have lunch, break bread. So there's a hierarchy of communication. We need to have the skills to know when to pick up the phone. And if we're losing that, those folks, those employees are going to be at a disadvantage, to be sure. Hey guys, I want to take a second here. So did you all know this Wednesday coming up, really interesting time, because in the morning you have the latest CPI numbers, and in the afternoon, the Fed is making their decision on rates. Like, how crazy is that? They don't get the information in advance, I don't believe. They have to make the call that day based on the information that morning. And both those things, they don't usually occur on the same day. Those are both happening this Wednesday.
It just goes to show you that they're not making their decision based on that data set, because they'll be baked by then, right? But your point on the Fed, and I think this is to me, this kind of summarizes it. If you guys have been following along with Team USA women's basketball, made the decision to keep Caitlin Clark off the roster, right? Which is just, to me, if you want to advance women's sports, you put the most popular person probably in the history of women's basketball on the roster regardless. And the reason they said they left her off is that they were worried about her fans being upset that she wouldn't get enough playing time on a stacked roster. So it's like, to me, it's like they're looking at the they're looking at the wrong data set. They're looking at the wrong thing. And this is why I equate it to the Fed. The Fed does not have all of the levers. If you have spending just going, and their goal and their mandate is to control inflation, they don't control all the pieces of the puzzle, and it makes their job very difficult or almost impossible. So hopefully we don't overshoot it and we go into a recession, because our economy is booming. There's so much innovation, there's so much growth, there's so many good stories, and their mandate to control inflation, unfortunately, they don't have all the levers to be able to do it.
Yeah, but kudos to Caitlin. I mean, I just got to give her a plug because I'm a huge fan. The media made more of a deal out of it than it really was, because she went to say, and I want to quote her, she goes, "Honestly, no disappointment. It just gives you something to shoot for. It's a dream. Hopefully one day I can be there. It's just a little bit more motivation." So, I mean, as usual, media spins it out of control, and meanwhile, Caitlin Clark is super grateful to be where she's at in life, and there's no doubt we'll see her wearing Olympic gold maybe 4 years from now.
I totally agree. The only thing that caught me, and I'm a huge fan too, the only thing that caught me was what they're leaking for the reason. Like, if they just say they have a great team and she's just out of college and there was no roster spot for her, that we tried, or we
I
just
agree.
made a really hard decision, right? It's
Yeah.
like, no, we don't worried about her not getting enough playing time. It's like, what?
Just say she's not one of the top 12, period. That's it. Yeah.
Right now? Yeah, exactly.
Yeah, exactly.
She probably could be for the next 20 years.
Okay, well, we all know everyone tunes in for Brian and Owen's opinions on women's basketball. So I'm glad we could get that out and covered here in the last couple of minutes of the pod. But thanks everyone for listening. A great episode. We'll be back soon with episode 38. Thanks.